All right, cool. All right, Steve. So this is a first. This is kind of weird doing this a little virtually, but
Yeah, we don't have our studio to back us up with the palm trees.
yeah, yeah. So kind of going back to the last few weeks, we're talking about the Growth Lab 4. Just to remind the audience, number one is understanding cash flow, which ironically is the topic of today, and we have a special guest today. And on with number two is understanding where you're making and losing money. Number
Yep.
three being
Number three, it's all about marketing for profit, making
yep.
sure that you're focused on profit, not just revenue, not just top line, but what's actually going back to number two, making and losing money for you. And the last one is pay for performance, paying employees to actually achieve your corporate and company goals. But yeah, like we said, or like last week we focused on the market for profit, number three. This week we're diving into number one, as Dan was saying.
And this week we have a special guest, Brian Suthoff from Tally Street. And, we got introduced to Tally Street, I don't know, maybe 3 years ago, 2 years ago. Yeah, probably 2 years ago.
Yeah, it was a while back.
It was a while back. And, their product has definitely come a long way. We have a couple of customers that are on using Tally Street. I actually reviewed one of our customers, Tally Street weekly editions today. It's a great way to organize collections, think about things like your cash conversion cycle and putting metrics around your cash conversion cycle. So excited to have Brian. I'm glad he joined us. A little bit about—
I think just to jump in, I think that one of the beauties of it is it's all about cash, which is what obviously the topic of today. But they're really driving like business insight out of this data. It's not just your usual cash metrics, cash items. They take it another, peel the onion back a few degrees and really give business insights.
Right. And one of the things that kind of, every time we do these interviews with special guests, there's always one or two things that really stick out that the guest says. And one thing that kind of stuck out yesterday that Brian said was, it was about, Tally Street is really about uncovering the hidden stories from your accounting data. And, we're big believers in like business intelligence. We spend a lot of time on financial plan analysis, driving data into dashboards, and then ultimately creating insight and inferences out of that data. So I was really excited when he said that. I was just like, man, that's where our minds are at. And, interestingly, like Brian comes at this, he was one of the co-founders of a darling of the startup world in Boston, Localytics. And he was there for about 7 years. And after that, it sounds like he started a craft spirits wholesale and distribution business. And what a crazy industry to be in when you're thinking about cash. And I'm sure that experience probably drove him to start and co-found Tally Street. He doesn't seem to be coming at this through the lens of a CPA or an accountant. It's really coming at this through the lens of helping business owners understand their cash flow, which is spot on when we're talking about the Growth Lab 4.
Definitely, and we've been focused on cash since pretty much since day one of the PVP, since the crisis, including the PVP. A lot of focus was spent on this. Knowing your cash conversion, but even more so, kind of going into the nuts and bolts of building those 13-week cash flows. How are you going to make it through the next 3 months? Are you going to make it through the next 6 months, 12 months? Building those models, huge tool that the businesses need, particularly right now. And planning with PVP money, EIDL money. What does that look like? What are the even going beyond cash to what are the tax implications? But we spent a lot of time talking about cash, and wanted to bring Brian into as a boots on the ground tool that we have customers using.
Yeah, and today working from home to doing this remotely, we're seeing flies and mosquitoes kind of hanging around the back of our heads. I'm excited. One of the things we talk a lot about with small business owners is understanding the cash conversion cycle. And we talked a little bit with Brian last week or this week. And, one of the beauties of understanding the cash conversion cycle is being able to isolate the drivers of your business that ultimately help you optimize minimize hopefully your working capital needs. And so Brian kind of came up with, when we asked, what are the top, what do you geek out to in sort of cash flow? What are the top three things you're looking at? And he, obviously DSO, which is something we've talked about plenty. But he also brought up something called days beyond term, which is spot on, right? Because DSO, let's face it, has its limitations. And then the other thing you mentioned was collections effective index. So I'm curious to kind of peel back the onion on those and dig a little deeper. So
Cool.
with that said, I wonder if he's going to be joining.
Let's try and bring him in. Cool. Here we go. Hey, Brian.
Hi there. How are you guys today?
We're good.
Doing well.
We're taking this one virtually today, so no palm trees behind us, no sunshine. Hopefully, we'll be limiting the amount of kids that will be running through here. So,
Great.
Cool. So we are live on YouTube, and obviously, ultimately, we will be posting this on Spotify and Apple Podcast. But let's kind of go with a roll here. And Brian, I was just telling Steve, one of the things that really stuck out to me from our conversation was you really see your job or Tally Street about uncovering the hidden stories from accounting data. And when you said that, I was just like, yes, I'm not dealing with another CPA or another accountant. I'm really dealing with a small business owner that probably had to, at some point, you were challenged with this, and you're like, boom, damn it, we need something like this. So why don't you take a step back, tell us a little bit about yourself and a little bit about Tally Street.
Yeah, thank you. And that's exactly what happened. It's my background. Most of my life has been in the tech business. Everything from data networking to online advertising to more recently data analytics, and really big data analytics. Basically, we helped at previous company, we helped ESPN, HBO, Visa, etc., understand how people use their apps. So lots and lots of information. But then in 2016, I did something just completely different, and I left that to start a liquor distributorship in Boston. Really, really different. I've always been a cocktail geek, so wanted to learn the space. My background, despite being in technology, was all in business to business. And a distributor is essentially business to business, right? I'm buying from the manufacturers who are making gin, vodka, et cetera, and then I'm selling it to stores and restaurants.
And if there's one industry that suffers from understanding and managing their cash flow, it's the distribution and wholesale business.
Absolutely. Margins are not that large, right? Not that cushy. And basically, I'm buying a lot of product, I'm maintaining inventory, I'm selling it, and I'm hoping that, first of all, I sell enough of it, right? And keep selling it to people, and that they pay me. So, and pay me on time so that I can use that to fund my purchases of new product.
So the big question here is, so my business partner here, little foo-foo, he likes the gin and tonic thing. What's your favorite cocktail?
It's really,
I'm a bourbon guy, by the way.
It would be like, it's like picking at one of your children. It's it really it depends on how hot
Depends on the day.
Exactly. It depends on how hot it is outside. But a couple of my favorites, I really love Negronis.
Nice.
Sazerac cocktails, and obviously you can never beat a great, a martini or a daiquiri made really well.
So you're a gin guy.
I do like gin. I drink plenty of whiskey too, but gin is up there. Absolutely.
Yeah, we've started geeking out to Negronis too here. In my household.
They're infinitely variable, which is the great thing about them, right? You can just start mixing them up with different things.
All right, let's not spend too much time on cocktails and get thirsty. So, Tally Street, tell me who started it? When did you start it? Talk to us a little bit about your growth story, right? You and I, Steve, and we met you, Brian, through a common colleague, Steve Snyder, over at Gesmer Up to Growth law firm, and that was like 2 years ago. So, tell us a little bit about your journey.
Yeah, absolutely. So it really came out of that liquor business experience, because as I grew that to eventually 200 accounts across Massachusetts, I wanted access to some of the customer insights that I was used to having in my more high-tech jobs. And I couldn't find any way to get them. They didn't come out of
Mhm.
QuickBooks or Xero, and any other tool I could have used usually required either it was too expensive or it required kind of real developer resources to do. So I spent a long time, actually, a couple of years, kind of thinking about this problem before starting Tally Street, and then started Tally Street to solve this for myself and other small businesses by basically looking at the one thing we all have, which is our accounting data, right? We all have sales invoices, sales receipts. We get paid on that. All that information is in the accounting data. It's the closest thing to a single source of truth that you have as a business. And as you said at the beginning, we went into this with the belief there are all kinds of valuable stories and customer insights that are essentially buried or hiding in that accounting data. And our job is to surface them and help businesses make better decisions. So we started Tally Street a little over a year ago, after again working on this problem for a couple of years before that, and we're off to a great start. So we're already connected to a number of accounting systems. We work with a number of accounting firms and businesses, and are you know doing what we can again to help other small businesses
Good.
make better decisions.
So maybe at the end of this, we can talk a little bit about your go-to-market strategy from the perspective of Tally Street. But another thing I sort of geeked out to outside of like uncovering the hidden stories in the accounting data, it was, we're thinking of cash and cash sort of like, okay, collections, bank account, right? Sort of that cycle. But you started talking about like, hey, the type of business intelligence that you can drive from cash data are things like, I don't know, strategic marketing information. You mentioned, I know one you mentioned, which deciding which customers are actually a good fit, and I totally agree with you. Like we're big fans of racking and stacking your customers, right? Whether it's good paying customers on a underlying customer profitability, which is like really the holy grail in business intelligence, which is very difficult to get to. But you also talked a little bit about customer retention. You know, figuring out the new versus the repeating customers. And I see in your reports to our customers, you do include a lot of that data. You want to talk a little bit about that?
Yeah, absolutely. I mean, this when thinking about cash, the first way to have more cash is to sell more, right? So to generate more cash, and that requires understanding your customers. And it's you can start at a pretty high level. I mean, things like lifetime value, just how much has each customer spent with you over their entire time they've been with you, or look at the last year and rank customers by sales over the last year.
Mhm.
But if you start to get more sophisticated, then yeah, you can look at things like customer retention. So how many customers, buy from you period to period. Or the next level of detail would really be net revenue retention, which is not only did they buy from you from period to period, but did they buy more or did they buy less?
Mhm.
Um, yes, right. So are they engaged in kind of how often they buy, and are they increasing their purchases or decreasing these on their purchases? Um, there's even a model out there called RFM, recency, frequency, and monetary, that basically looks at, it's pretty simple, really. It's how recently did they buy from you, how often do they buy from you, and how much money have they spent.
Hmm.
If you take those three things together and then you kind of rank and group your customers by those three elements, you can immediately see who your best customers are. And then you can sit down and start to look at them and see, why are they your best customers? What are those customers all buying a particular product, that causes them to come back? Or they maybe, were they certain sales team members help bring them in, certain customer support people made them successful? Are they in certain industries themselves, right? So then once you've identified those slices of who your good customers are, the ones you're retaining and the ones who are buying more, you can go to the next level and try to understand why,
Right.
and then do more, right? Do more of what's working.
I know Byler's got a question, but one last thing. I always say to small businesses and customers, garbage in, garbage out. Because your system is so interconnected and dependent on the underlying accounting data, how do you I guess that's why you have to work through intermediaries, through accountants. How concerned are you, for example, are the invoices being inputted into the general ledger correctly, meaning invoice date versus date of term, right? With due date. How do you deal with that? Because we have a lot of customers that, for what it's worth, they like to see, and it's mind-boggling to me, but they like to see their receivables aging, not based on the due date, but based on the invoice date. And it drives me crazy. It just doesn't make sense because it skews everything, the whole aging. How do you confront that type of situation?
Yeah, so two things. First, in terms of the garbage in problem, absolutely it happens, right? We see some weird use patterns, odd use patterns. Generally speaking, though, at least the invoice data tend to be some of the better data sets that businesses have, because if they don't issue good invoices, they tend not to get paid, right? So, one thing businesses try to really get right are the invoices or the receipts that they're generating. And that said, to your point about using different dates here or there, it's and it throwing things off. What we found is one benefit of having an analytics or metrics focus to understanding a business is that it makes the value of doing it better way more important and way more valuable, right? Because if you're doing something a little weird, then it ends up throwing off your other metrics, which means you can't use those as well to manage your business. So we found businesses who go back and as a result, they start to clean up their payment terms. We found a lot of, back to retention. We found we've helped customers where we produce the first set of reports and they see the retention numbers and they're not good. And they think like, I just know that my retention's not that bad. And then we look at the detail, and what we find is they have duplicated customers in their QuickBooks or Xero, et cetera.
We see that a lot.
Yeah, so you actually have more repeat business and more retention than you think. The problem is you're spreading it across duplicated customers. So you go in and start to clean that stuff up, and the benefits, kind of as you alluded, right, spread across lots of different reports and results to help you manage things better. So it's actually it's a great way to I think for accountants and advisors to show businesses the value of spending a little more time thinking about how they input some of this information, because the businesses then directly benefit from doing it a little bit better.
In terms of your some of your customer stories, I know you're going through accounting firms, but what are some of the kind of second derivative things that you've seen them do, whether that's getting their books cleaned up, understanding customer behavior? What are some of the kind of the wins that you have in your your bailiwick? What are some of the stories you've kind of can share with us about that customers have done and implemented, more than just like knowing what their days outstanding is or other things, but getting that insight and then making decisions based on that move them towards their corporate goals?
Sure. So a couple examples, maybe one on the revenue side, sales side, and one on the collection side. So on the sales side, we had a customer who was in the process of raising money, right? Raising money from investors. And not surprisingly, investors care about things like retention. So they looked at their customer retention and it wasn't kind of as good as they hoped, right? And it was frankly, a little disappointing. We helped them also look at their revenue retention, and their revenue retention was fantastic. So when you put those two together, what they realized is that they were losing some customers, but they weren't the right customers anyway, right? They weren't the best fit for them. And they were keeping the ones who were a good fit, and they were growing. So their net revenue retention was great, while their customer retention by itself looked kind of bad. But that's a fantastic story for investors, right? You've really zeroed in on who your best fit customers are, and then you're growing that business.
Right. That's about more than just cash. It's about strategic marketing, right? Who is the customer? Segmenting your market, understanding who's going to buy, what the right fit is. That's awesome.
Absolutely.
Yeah, I'll tell you, like, one of the things that kind of have come out of our conversations is I think we've spent maybe 20% of our time actually talking about cash and cash metrics and accounting. And we always sort of revert back to what's really important here, which is strategic marketing, right? So I kind of like that.
Yeah, yeah. It's just again, those stories in the accounting data are usable in so many places if they just get kind of analyzed well and then shared across the organization. Um, so the example on the collection side was, we shared, we had a new customer that a CFO signed up one of his clients. And in the first week, they collected an extra $20,000. Basically, when they received the results, they noticed it helped them identify a problem that some of their customers just weren't getting basically touched the way they should, right, for collections. And they found a problem in the way they're running their operations. So they went in and immediately collected 20K. They tweaked their back-end operations a little bit. They put the right incentives, kind of bonus plans into place now that they had metrics they could check against. And so they had, a quick 20K in the bank, and ongoing, collections continue to improve because, at kind of the cliche, right? What gets measured gets done.
Yeah, no, that hits on both the cash, which is what we're talking about today, and number 4, the GrowthLab Four, is pay for performance. You just said, that customer not only changed some of their operations, they changed how they're compensating their people to align with corporate goals, reducing days outstanding, and driving cash. It's awesome.
Absolutely.
Yeah. So
tell me. Yeah, talk a little bit about some of the metrics. You spent a lot of time on this over the last year and a half, like diving into more than just I'll say traditional cash metrics. Talk to us about CEI percent, days outstanding is obvious, DBT, other things that you focus on when you're talking shop about Tally Street.
Yeah, absolutely. So DSO, or days sales outstanding, is probably the most widely known, cash collection metric. Been around for decades, if not centuries. We've actually, as we've talked to people, we've been promoting one that's relatively new called CEI, which is collection effectiveness. And what we like about it is it's really easy for people to understand. It's really easy to do things like reward your team. So the result is a percentage of basically how much of what you should have collected did you collect. So let's say a company issued 100 invoices, all for the same amount, and all of them were collected on time. Then your CI would be 100%. If 80% were collected on time, it's 80%. So it's a great high level way to know exactly kind of, even if you change terms. So let's say during, the COVID lockdown, a business was able to extend their customers some extra days. So maybe instead of net 30, they were able to do net 45 or net 60 for some of them. Well, on the one hand, if you look at DSO, that makes it look like it took longer to collect. And if you just looked at that and you saw your days outstanding go from 30 to 45, you might go to your collections team and wonder what the problem is. But if they still collected in 45 days, they still get 100% score because they collected it before it was due. It's just that the company had a strategy to offer people longer terms. So collection effectiveness is a newish metric that we're really trying to promote, because it's a great, think of it as a fuel gauge, right? It's kind of a great top line number that you can use to keep track of how you're doing. And if that number starts to drop below whatever threshold you set, then you can dig into the details.
So that's more of an operational metric.
Absolutely.
Right. Versus DSO, it's more of a working capital metric. And the nice thing about DSO, of course, is you can make quick back of the envelope calculations based on revenue, based on gross margin understanding. Like within 30 seconds, I can probably tell you how much working capital your business has sucked in, right? Or sucked up.
Yeah, that's exactly right. And with DSO, they're generally speaking, there are two ways to calculate it. So one way is off of the balance sheet and the income statement, and you're basically looking at the ratio of accounts receivable to average daily sales. And it's a great way to get an estimate of kind of working capital needs, how quickly you're turning things, how your balance sheet's structured, et cetera. The other way to calculate DSO that's more operational is based on when customers actually paid. So the number of days from the invoice to the actual payment. And that gives you again, kind of the operational number. And that number tends to be, the balance sheet number can be skewed a little bit by other changes on the balance sheet and the income statement. Whereas the transactional based metric of DSO is, it isn't, right? It gives you the exact average of how long it takes to get paid.
Yeah, I know you have one more metric, but one of the things I do like about the operational metrics is it does allow management teams to parlay that into pay for performance, because it's just so common to see salespeople, maybe some marketing, being paid for performance, right? That's just it's a no-brainer. But there's always this tendency of staying away from paying for performance for collections people. But they are one of the most important team members on your finance and accounting staff, right? They are like at the epicenter of your cash management strategy. So I like the operations because I feel like I could quickly parlay that into pay for performance, right? Especially your index effect, your collections effective index.
Yeah. Yeah. And the reason it's absolutely, and the reason it's so good in that pay for performance is that, the collections team, how well they, the amount of days it takes to collect isn't entirely under their control, right? It depends on how many days sales offered a client. So things like CI effectively take all that into consideration and give you something that you can still compensate on.
This is something that you produce every week?
Yes. Yep. Yeah. Every week, every month. We even do it at the company level, but also for the individual customer. So you go back to understanding customers and finding ones who are a good fit. We talked a lot about revenue, but the other side of that is maybe you sell them a lot, but they don't pay you very well, right? So we actually look at that for each individual customer a business has too, so they can combine the two and find who's not only the best sales customer, but who also pays me really well.
Right. I always tell customers, you are not your customer's bank.
That's right. Right.
Cool. And the last metric was DBT?
Yeah, so DSO keeps track of how well you collect payments, basically. DBT is a nice complement to that because DBT stands for days beyond term. And what it tracks is how late things are that have not been paid. So DSO is things that have been paid. DBT are things that have not been paid. We often describe DBT as if you wanted to compute an average of your aging statement, that's kind of DBT, right? It's like I have all this money still waiting to be collected. It's overdue. And how overdue is it kind of on an average basis? So, especially during the COVID lockdown, it wasn't unusual to see businesses, they would see their DSO get better, which if you only looked at that, you would think that like, wow, surprising, right? People are actually paying us more quickly than they used to.
Right.
The problem was a lot of people weren't paying you at all, right? So it wasn't even getting included in that metric. So DSO might go down, but DBT was going up, which was showing that people were just delaying paying. And so that's obviously an important number to track. And those two together give you a good sense of how long it takes you to collect and how much is still out there and how long it's been out there.
And to Dan's point, how much of a bank you're acting for on behalf of your customers.
That's yeah. How many extra days are you lending them money than you plan to, right? Or than you hope to. Yeah.
We're huge fans of 13-week cash flow planning, right? It's especially for companies. Yes, during COVID lockdown, it was important. There was no PPP loans in sight 4 months ago, 3 months ago. And for those companies in sort of the turnaround, restructuring, sort of flat line growth, 13-week cash flows, they live and die by this. How well does Tally Street's reports help us with developing those 13-week cash flows?
Well, so the great question. The underlying information is there because you know how each individual company pays. So you could then look at your sales to company, customer A, customer B, and that even though your overall DSO is maybe 30, that one tends to pay you in 45. And maybe that was a big sale this month. So that's going to change your numbers. But we actually go a step further and we use, some smart software, machine learning to automatically produce a forecast for businesses. So because we know the payment performance of every individual customer that business has, we essentially line that up with the existing accounts receivable and use that to forecast how much cash will come in this week, the next week, the following week.
That's great. And let's talk a little bit about general ledger integrations, because that is critical, right? Outside of QuickBooks, what else do you integrate with? Because we do have customers, and there are still small businesses on Sage 100, 300, NetSuite.
Yeah, thank you. So we started with QuickBooks, and we've been supporting for a while now QuickBooks Online, as well as Desktop and Enterprise. This month, before the end of this month, actually, we're releasing support for Xero and Sage Intacct. And then we've got a short list of other ones we'll be adding in the coming months. So right now it's QuickBooks, Xero, and Sage Intacct. Great.
And when is Intacct coming out?
It's in testing right now. So we hope to have it fully released in just the next week or two. So hopefully before or soon after July 4th holiday.
Great.
Is NetSuite on the short list of development?
Yeah, the short list after that includes NetSuite and Microsoft Dynamics or Business Central. Yeah.
Great. One last question on my end, your go-to-market strategy. I know you and Steve just talked a little bit about the underlying customer. Is the strategy to go through accounting firms to help with not just interpretation or inference, through business insight, but also policies and procedures? I can see that. How does a small business that wants to go directly to you, how do you manage that?
Yeah, so our approach is definitely we prefer to work with the advisors, the accountants, the CFOs who are helping businesses. I mean, generally what we found is a lot of small, medium business owners are experts at whatever their business is, the widget they're providing or the legal services they're providing. But the reason they have outside help for accounting and finance is because that's not where they're an expert. So really it's those folks like you who can take that information, understand it, help explain it, help apply it to their business. An individual business can find Tally Street, on the internet, come to our website and sign up. But we really invite them to, if they do that, we really invite them to add their advisor, right? So they can collaborate with whoever's helping them manage their finances and get the extra guidance and the help they need. And we really love working directly with firms as a solution that they can then go on and provide to their clients as just a better way to manage their cash flow, better understand their customers, and again, make better overall decisions.
Great. And the website for Tally Street is?
Yeah, you can find it at tallystreet.com. So Tally Street, spelled out, street.com.
Is that where you live, on Tally Street?
I wish. Nope, but go ahead.
You're working with the local authorities to change the name?
That would be a great idea to do that. I'd love to do that. I don't know if we have any time left, but there's actually a fun story behind it. So I don't know, have either of you heard of Tally Sticks? So Tally Sticks are kind of like the first Bitcoin. They actually, the Sumerians did it on clay tablets, Europeans and others did it on sticks. But basically what they do is if I sold you something and you owed me 100 shekels or 100 pounds, whatever it is, we'd take a stick and we'd mark it somehow to note that it was 100. And then we'd break it in half. And you would take half and I would take half. Now it's like two keys, right? You put them back together and it's matched. So you'd have a half the stick, I'd have half the stick. So that would be the debit and the credit. I was actually a stockholder because I had that stock in my hand, right? That wood stock. So you would then, when you finally paid me, we would match up the sticks and then basically destroy them, throw them away, and the debt was resolved. Wow. I could even sell my stick to somebody else. So if I had a half a stick that represented your debt, I could give it to my bank or sell it to my bank. I could sell it to somebody else. So it was this whole very Bitcoin-ish kind of financial system. So when we started Tally Street, we really loved that idea, right, of these Tally sticks. But the Tally stick domain was taken, so we went with street instead.
So And on that note, I appreciate it, Brian. This was a lot of fun. And,
Yep.
I'll tell you recently, over the last, say, 2 months, I've actually been digesting more of the Tally Street reports. And today I actually just sent it over to one of our customers, CPAs. So looking forward to working closer with you in the coming future. The product has come such a long way. I love it.
Thank you. I really appreciate it. Thanks again for inviting me today. This was a lot of fun, and hopefully we'll get to do it again sometime.
All right, totally.
Cool. Thanks, Brian.
Okay. Thanks, guys.
Take care.
Love
Bye.
it. Bye.
Bye. Well, that was cool. He's a great guy. And